The U.S. Energy Information Administration's latest short-term energy outlook gave oil bulls something to smile about. In the latest report, U.S. oil demand is set to increase by 100,000 barrels per day to 20.5 million barrels per day in 2024. U.S. oil production is also expected to grow by 300,000 barrels per day to a record 13.23 million barrels per day in 2024. This is slightly lower than the previous forecast of around 320,000 barrels per day. In the Permian Basin, the U.S. largest oil field, production is set to grow by 10,000 barrels per day to a total of 6.39 million BPD in 2024. Worldwide, oil demand remains unchanged, with consumption increasing year-on-year by 1.1 million barrels per day to 102.9 million barrels per day in 2024. 2025 forecasts predict worldwide oil demand to decrease from 104.7 million barrels per day to 104.5 million barrels per day. This is mainly due to the slowing Chinese economic growth. On the trading front, Brent futures are expected to range between $85 and $90 by the end of 2024. This is due to expected OPEC Plus inventory cuts. WTI crude price has been forecast to trade at $80.21 by the end of the year. Glencore's first half 2024 earnings saw the company experience a net loss of $233 million, which was exacerbated by a $1.1 billion impairment charge owing to its South African and New Caledonia operations. Lower earnings were primarily driven by lower coal prices in the first half of 2024. On the metals front, low cobalt and nickel price realizations and a low treatment refining charge on copper and zinc contributed to the company's revenue decline. On the positive side, shareholders have agreed to keep its coal business after the idea of a potential spin-off was presented. Glencore believes that the retention of its coal business will enhance cash flow generation and guarantee future dividends to shareholders. With net debt reduced from 4.9 billion in FY23 BN to 3.6 billion for the first half. However, with future cash outflows, particularly the 6.9 billion for the Elk Valley resource acquisition, there are potential risks about the company's finances. Shares of Occidental Petroleum were up 1.1% after the bell. The oil major reported a production increase of 1.26 million barrels of oil equivalent per day, up from analysts' estimates of 1.24 billion. The company also posted a profit of 1.03 per share for the quarter, compared with analysts' estimates of 77 cents per share. This was the first time the company was reporting after it had closed the $12 billion acquisition of Crown Rock. This helped bolster the company's position in the Permian Basin. With a long-term debt of $28 billion, all eyes are now on how the company will manage its finances. Oxy plans on repaying $4.5 billion of its near-term debt and plans to realize $970 million from the sale of its assets this year. South African copper miner Copper 360 announced the start of operations at the Rietberg underground mine in the Northern Cape. The mine has been inactive for more than 40 years, and Copper 360 sees an opportunity to tap into the mine's known reserves. The target for the first month is 12,000 tons, which will increase over 4 months to 45,000 tons per month. This is in line with the miner's cluster mining strategy, in which it plans to reopen historically dormant mines that have defined and known ore reserves.